Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. Roll time. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good time. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong. Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. They moved my camera a little bit. Does it look okay? It looks okay. I think we're fine. But my baby moved the camera, and I haven't been able to get it perfect again. It's a little too high. Hey, that's okay. We can mess around with that today if we want. But today so far looks like a risk on day for Friday. For once, that would be super interesting. So what do we got going on here? So here's the S&P 500. Yesterday was largely a down day, but we were seeing some positive movement overnight. And then Putin said something about how he was really hopeful about a peace deal or whatever the deal was, and markets spiked back up. So now it's coming back kind of quick. I don't know. Like, the thing is he's saying this even as like troops are still surrounding Kiev and stuff. So I'm a little skeptical personally that anything's actually going to happen. By the way, is there something off here? I feel like, no, I think we're good. I think I just need to, reposition something. Anyways, so then we come over to the treasuries. Treasuries taking another dip down, but I mean, yesterday after the CPI, they got hit pretty hard. Even though the CPI wasn't bad or anything, but yeah, they got, well, actually it was before the CPI. In the morning, they got hit pretty hard. And when Putin said that, pushed them right back to where they were. Oil actually not taking as big of a hit as I thought it would. And there's natural gas. I don't know. I can't explain what natural gas is doing. It's just kind of been all over the place. There we go. Gold and silver getting slammed down pretty hard there. There's silver. Kappa is still kind of in its range. And then which can come over to like the Bitcoins and stuff. Well, the Bitcoins seem to have jumped with the rest of the risk assets, but coming back. Here, remember yesterday they had the CPI. There was like a little spike in it, but it immediately came back. And then, of course, there was this spike on the executive order, and that one came back. So I don't know. There's some fishy stuff going on in Bitcoin. And then we got the dollar at 98.5. So the markets are largely risk on, but you know, I'm a little skeptical. Clearly, the market is maybe a little bit skeptical too. Yeah. So that's where we're at. And let's see here. We do have the consumer confidence today? Consumer sentiment, rather. University of Michigan, right? Yep. University of Michigan consumer sentiment at 10 o'clock Eastern time. That's basically all the news we got today. I think we should probably be... Sometimes when I open up Financial Juice to the tab, it does the siren thing, and I'm like, oh my gosh, what the heck? What the heck? All right, so... okay, let's make sure everything over here looks about right. I think we're okay. Now, it's also, by the way, interesting to me. We're well above 2%. I know, kind of in the same levels as yesterday, but if we're at 2% right now and peace actually breaks out, how high is this going to go? Okay, let's see here. What is... oh, there's a bunch of Canadian numbers are about to come out here. Your market usually doesn't react too much to that stuff, but you know, it's all we got. It's all we got today. Ukraine still has 56 operational fighter jets in its inventory, and the Ukraine Air Force is still flying 5 to 10 sorties a day. That says a senior U.S. defense official. That was 6 minutes ago by Jennifer Griffin. There's all those news. Well, well, sounds like the Canadian dollar's moving, but oh, look, they actually the ZB just take a dive on that actually. And I'm seeing steepening across the board. So this further reinforces the risk on action, doesn't it? Oh, I did not see that news in any of my summaries. Last night, Senate passed the massive 1.5 trillion omnibus spending bill. Wow. Okay, this camera is really bothering me. It's too high. By the way, you guys there? We all good? We streaming here? Okay, yeah, we got 10 viewers. Oh, you know what? We need to do stream share vision. Share vision. I really need to fix this thing where I have to select a thumbnail. That is really annoying. Having to select the live thumbnail. I need to come up with better titles too, but like it makes me select the title at the beginning. I don't know. Okay. Start. Start streaming there. Kurt Reynolds. Hey, how are you doing? Good morning. Okay, we are good there. So, let's fix the camera, shall we? And I have an interesting personal issue to discuss today. Futures Trader 71 is in the CBOT building, huh? And they say that the ES is only 25% done? Well, you know what's going to be interesting is this whole thing that's been going on in the nickel market. And that's happening right at the roll. And I really wonder what happens after the roll. Well, I mean, I wonder what happens when they restart on Monday. If the risk on sentiment continues, then maybe nickel prices come all the way back down. But I don't know. I'm that apparently they're letting this guy that keeps the short on, or that had the huge short and put the whole London Metal Exchange at risk, right? You gotta let him keep. Can you believe this? You're gonna let him keep the short. It makes my head hurt thinking about it. It really makes me mad, to be honest. What do you think about the camera here? I could probably bring it down a little bit more. Yeah, let's try it again. I have to turn on the grid lines here for starters. That looks okay, yeah. We'll go with that. Well, I'm a little concerned looking at the treasuries here because I'm kind of thinking that we're probably gonna have. Well, I think that the direction you want to go is higher rates today, but I'm concerned that you're not going to be able to get much more than what we've already had. There's something in this room that's like different and causing the echo to be different. I can't tell where it's coming from. Maybe it's that corner. Maybe I need to move that baffle. Just in from NATO, Russia is launching many air operations from Belarus. I spilled some water on me. Didn't even notice. The illegal and unprovoked invasion of Ukraine is continuing. Yeah, I don't know. I mean, the trend is down. The trend is definitely down in the treasuries, but e- as far as we've gone, that just kind of increases your risk, right? If a bad headline comes through, and I really think that there's a good chance that you're gonna get a bad headline. I don't know. I shouldn't say like I think there's a headline that's imminent or anything like that. It's just that I don't think that there's reason to be as optimistic about a peace deal in Ukraine as the market appears to be right now. You know what I mean? Close that. Close that. Close that script we was working on. You should check out Reddit. So yesterday on Reddit, I wanted to post around about the whole nickel thing. And when I tried posting, it would just delete it. I can't. I think that my account must be shadow banned on that one subreddit. I don't know why that would be, but I was very, very frustrated. Oh, that's an interesting. Well. So I was mentioning in the neutral politics subreddit that, you know, the Saudis appear to have been dragging their feet on increasing oil supply as a response to Biden's foreign policy. And the guy asks, is that Biden's fault or Mohammed bin Salman's? And it's like, well, it seems to me that either one of them has the power to change it. know. What do you think? Yeah, probably. Probably if anything's going to change, it's got to be Biden. It kind of comes back to this thing. It's like oil prices are really high. Democrats are fretting because they know that high oil prices will hurt them at the voting booth. But, you know, I really don't think that Democrats are all that unhappy about it. I think that overall Democrats would prefer that oil prices are high. They just wish that oil prices could be high and them not have to pay a political price for it, you know? Because every policy choice that they have, they choose the policy that has the tendency to increase oil prices, you know? You know, these treasuries are trading a pretty messy range. It's been like 4 ticks up, 4 ticks down, back and cross. You're new to trading. What would you suggest? Not trading, probably, but so what I teach here is informed trading, which means that for you to take a trade, you need to have a piece of information that you believe is not factored in by the market very well, that has a high probability of predicting what the future orders are going to be. If you don't have a piece of information like that, then there's no reason to trade. Your expectancy is negative, essentially. And this is backed up by a wide body of research that shows us that the market is very statistically efficient. So you can't just go and find some pattern that somebody shared on Reddit and copy their pattern and make money, because if it's public, it's already going to be arbitraged out of the market. So how do you get that information is a good question. So the first thing that you got to do is it's just kind of levels, right? I wish I was part of the club. I wish I was. I'm sure that there is information out there that's not you don't want to trade on non-public material information. Okay, that's illegal. Um, like companies' earnings being leaked or things like that. But there can be things like, a geopolitical happening or publicly available data that is pretty good at predicting something that's going to happen, but that the market doesn't really pay attention to. And there can be situations where the market as a whole can know something, but it's not correctly priced in by the market. And so to be able to identify those things, the first thing is that you just need to do your best to be informed. And that first step of that means like reading a lot of news. So I would visit CNBC, see what the major stories they're pushing that day are, or maybe have like a Bloomberg or Wall Street Journal subscription. I would have a news squawk so that you can hear the headlines as they come out. I would check out TweetDeck and watch Twitter. And I would read Zero Hedge, and in particular on Zero Hedge, because they post a lot of nonsense political stuff. But what you're looking for on Zero Hedge in particular is any story about the Wall Street research outfits. Like they have a story about what Nomura is saying almost every day. You got to read those. That will tell you a lot about what the gamma and the systemic CTA strategies are doing that can really help you pick directions and make some decisions. Ukraine Prime Minister Shimhal, no results in negotiations with Russia. Yesterday was a real attempt on our side to have some concrete negotiations with Lavrov, but as you have all been able to observe, it has not led us to any results. Okay, so as as Putin has been saying positive things and spiked the market up off of that, the guys on the Ukraine side don't sound as positive. Don't sound as positive. So you see that right there. That's a piece of information that we could use, right? I didn't see much of a reaction just based off of that. So I think if we were going to make this trade, we might have to be patient, and you might even have to wait a day. But it's from what we're getting from the Ukrainian side, it sounds like negotiations aren't going that well, and maybe the Russians are just trying to mislead people, like make everybody think that peace is about to happen, and then hit Kyiv, take over Kyiv, something like that. You could potentially trade off of that. I don't think I'm going to. I'm not quite confident enough about it. I actually do think that I want to be like, I think that the interest rates will come back a little bit here, or that the ES will come back a little bit here, but the time frame in which that might happen might not be my kind of favored time frame. So I don't know. You can definitely go short here, the ES, though, right? That's right there on the lows. You could probably go short here and hope that you get like the 60s. Well, I'm not going to risk my live account, but for the purposes of demonstration, let's take one here and see what happens. Okay, is it good to trade the correlation between treasuries, for example, define who are leading and then executing in the lagger like CFT does? I don't know. What is CFT? That's an acronym I don't think I've ever seen before. Is that a person? Well, if you're going to trade treasuries, understanding the yield curve and understanding what direction the yield curve is going is a critical skill. Oh, he's a Canadian futures trader. Okay. So for instance, so if I was going to do that, I tend not to do that. The main reason I tend not to do that is because it doesn't make sense from my risk management perspective. Like if I want to go and trade in anything other than the 10-year over here in the micros, like it tends to screw me over when I do that because the spread is just so much bigger in these other instruments, right? And if I want to come up here and do it, then the tick size is different, and so that doesn't work out as well. If I was trading multiple contracts here in the treasury, maybe it'd be different, okay? So for most retail traders, it really just makes sense to only trade the 10-year, unfortunately. But you still need to understand this because what you're going to see is there is going to be a skew. So the way that I have my DOM set up, you want the really long description here? How detailed do you want me to get in here? I'm going to get really pedantic here, okay? The thing I'm going to explain is going to seem really weird, okay? So this is the yield curve, right? Actually, let me minimize this DOM here. Make some space. 10 years always leading, not necessarily. Okay, so we have right here, here's the yield curve, right? Here's 0, here's 30, right? And you're going to see the yield curve typically be something like this, right? And then we might see it move and it be something more like this, right? So what would that be? That is a bull flattener, okay? Because it's the yield curve is more flat, right? There's less of a slope to it. And the yield curve increased. No, wait, do we call that? No, we call that a bear flattener. Anyways, I forget whether they say if it's bullish or bearish based on whether it's the rates or the prices, but I digress. Whether it's a bull or that doesn't matter. The point is this is flattening, okay? Because these rates are coming up, right? So flatten means is like this. From it. Flat means from this to this. Okay? So that means that the short-term rates rose more. Okay? So when we come over here, that means this is going to go up more than this. Right? And draw a little arrow. Okay? So if I'm looking at my DOM and you can see it, look, if I draw a line down like that, right? Because the short-term rates rose more than the long-term rates, okay? At least in this most recent move, okay? So when I see it over here, it's going to be the opposite, right? I have my 5 and my 10. I'll bring my DOMs back up now. Oh, where did you go? Z and ZF. Okay, right? Over here, we should see the same curve, right? So that's why up here, I have the 5-year on this side, and down here, I have the 5-year on this side. Okay? Does that make sense? And then I also have it that way because on the chart, the spread, the actual number, the difference between, you know, if I was to do the 5 and the 30 and there's a ratio between them, but if I do the ratio between the 5 and the 30, I should also see the chart going down, right? So I don't have to think about which one is going which way. All I have to think about is which way is the line going, this way or this way, right? Flattening, steepening. Makes sense so far? So all I've done is I've used the heuristic with the way that I've set my DOMs up to make it easier for me to interpret which way it's going. Okay. Now, based on that, then I can make a decision about which way we're going to go. So that most recent move, it was flattening, but only a teeny tiny little bit. Only a teeny tiny little bit. What we've been seeing mostly today has been quite a bit of steepening. So what is happening is we're going to go from here to here like this. You're going to see the 30-year drop more than the 5-year. It's going to steepen, right? So, yeah, in general, do they move the same direction? Yes. It's extremely rare that you will see the 30-year go up and the 10-year go down. Like, I've literally only seen it like 3 or 4 times. Okay? It's extremely rare. And it's only been like, you know, there was one swing on the day where they moved on opposite directions or something. It's extremely rare. And that could only really happen if somebody was simultaneously executing in both with market orders and putting a really big spread trade on. Okay. So if we see a continuation of the trend today, and I'm not saying that that's what I think is going to happen. In fact, I'm kind of sitting on my hands because I'm not so sure that anything is going to happen. Okay. But if we see a continuation of the trend, then what we should expect to see is the 30-year will go down a ton, the 10 will go down moderately, and the 5 will only go down a little bit. Because we're steepening, right? Steepening. So what does that mean? If we're steepening and we're moving down, which one do you want to take the short in? You want to take the short in the 30-year, right? And so that's how you have to sort it out, right? Now, remember I said, even if you're not going to switch instruments, you still need to understand this. Why? Well, because it's going to affect the order flow over here, right? What you're going to see, they're all going to move down. So you're definitely going to see a lot of market selling over here in the 30-year, right? Well, what are you going to see over in the 5-year? Well, in the 5-year, because if the spread trade is going to be sell the 30, buy the 5. So even though the 5 is moving down, you're probably going to see a lot of buying in here. You're probably going to see a lot of limit buy orders. And like every step down that it goes, they have to go through a bunch of buy orders, right? So a novice that doesn't really understand a whole lot about the yield curve, and they're watching the 5-year, they're going to see all of this absorption in the 5-year, and they're going to think, oh, somebody is buying here. Maybe I should buy too because they seem to know something. But that's not actually the case, right? The buying is only a result of the spread, right? So that's why you want to know what the spread is regardless of which way you do it. But there is definitely a thing where if you can kind of take on the risk and so forth, and you're really confident about which way the spread is going, to choose which instrument you're going to trade in based on the direction, and that can give you a little bit more favorable ticks, right? But I think that in order to do that, you need to be comfortable probably trading 2 ZB contracts, right? Not that you would put 2 ZB contracts on, but like it's going to be like when you do a trade, you'd maybe do 1 contract in ZB, 2 to 4 contracts in the 10, and 4 to 8 in the 5, depending on what kind of a ratio you want to do. But if you're just doing a ratio of risk, right, the 30 is twice as much per tick as the 10 is. So, you're going to do 1 here, 2 here, 4 here, right? I'm not very comfortable trading the ZB. It was like $31 a tick, and it just destroys you, man. And I'm using, a teeny tiny little account. Yeah, it doesn't really work. And over here, then you'd think, oh, it would totally make sense. Yeah, except for that the spread in the 30-year is literally 10 points right now. Ugh. So let's say Z and ZB are at 3 ticks of their high of the day, and UB is at 7 ticks of their high. So you're saying it's like this, and we're moving up, then yeah, it would be better to do the UB. But do you see how I did that? All I have to do is I just have to draw. I just have to look at the diagonal and I know. Right? Because otherwise, what confuses people is they get stuck in this like, okay, with steepener means that short-term interest rates are rising higher than long-term interest rates. But then over here in the treasuries, it's the opposite of that. So it's this way. And then that means that it's this way. Is it no? Like how they get confused, right? But if you just set your instruments up in this order, you don't have to think about that. You can always go steepening, flattening. Ta-da! I just shared with you a really big secret that I've always kind of wanted to make a video about, but I never kind of did because I didn't think anybody would be interested. Anyways. Now, the other side of this is my indicator suite has some spread indicators. So you can see what the history has been here today. This one right here is the 10, and this one is the 5. And you can see that today there has been a little bit of steepening, but more recently on these most recent moves, we've started to flatten back out again as the 30-year comes up. So I think that might have been the comment from the Ukrainians on the peace deals that moved the ZB up. Have to say, it's a pretty quick move there. It took about 5 minutes. But it was while I was explaining all of that things flipped, right? So I have to wonder. But then when you come over here and you look at the ES, nothing has happened. Nothing has happened. Let's see. Your market here says 3.3 trillion of notional is expiring, falls 2 days after a decisive Fed meeting and in the midst of a complex geopolitical situation. They must be talking about the options expiration next week. GC looking kind of bearish. Yeah, gold is getting hammered. I guess the thing is, I think I was having this discussion with somebody from work, and they were like, "Oh yeah, I just want all hard assets. I want all gold. I want all silver." And I'm like, "Well, I mean, gold and silver has been doing really well lately, but when you look at its performance over the last little while, it really makes it hard to get comfortable with any kind of a position in gold and silver, doesn't it? Because it's like when it does go up, like with the Ukraine crisis, there was points there where, yeah, gold moved up because of the Ukraine crisis and everything, but it took a long time for them to get up there, right? And now here today, on the days where it's like, risk on, gold just gets slaughtered. It comes back so hard. There is something systematic going on in the metals, all of the metals, that is essentially holding metal prices down. And we all know what it is now because of the nickel trade, right? There are a lot of shorts in silver. There are a lot of shorts in gold. Now, that means that if the Ukraine crisis gets worse, that gold and silver could just take off, right? Oh, I need to lock the door here. Hold on. Did they really get as high as 2089? I thought that it was more like 2030, but yeah, this just comes back so hard, right? And not only that, but then when you go on like a technical perspective, right? They just seem to have a very, very difficult time staying above 2000. And this has been going on for, like a year, 2 years, right? I think gold is probably worth keeping on right now simply because the markets do appear to be risk on. We'll see. Oh, we'll see. India says it accidentally fired a missile in the Pakistan. What? Oh, that was just some random on Twitter. I don't know if that means anything. U.S. SEC rejects the proposal to list and trade shares of NYDIG Bitcoin ETF. The U.S. SEC rejects the proposal to list and trade shares of Global X Bitcoin Trust. I'm so shocked. Not. I don't know, guys. We'll see when the S&P 500 opens up, but it's been a pretty quiet session today. And while we did see that little spike up in the treasuries, it's already come back, and the treasuries are quite wide. Like, you got to be very careful today about what price you pick in the treasuries, don't you? Because if you were to buy up here on the higher end of the spread, it's going to come back on you almost Every time so far, at least it has, right? In terms of steepening slash flattening, what's the relationship between MES and ES? Well, so if you're talking about the relationship between MES and ES, they should be the exact same price all the time, right? If you are fast enough, you can potentially catch situations where the MES moves a little bit further than the ES because there is less liquidity over there and some retail trader is getting stopped out or something. So you'll often see, like, on the edges, on the stop runs, the MES gets hit harder. But in terms of the correlation between the ES and the treasuries, this is where it gets a little bit more complicated. So the standard procedure, or the traditional correct correlation, is that treasuries are inversely correlated with equities, which is to say, if equities are doing well, then we're likely to raise interest rates. Okay, so that was an interesting move there in the ES. I wonder if there was some news hitting the market. It does look like some risk off is coming back into the market, though, and the ES falls lower. Okay. Draghi says that many EU countries support a cap on gas prices. Dude, that's about, I'm telling you, price controls, they tried that in the 70s. It's not end well. Oh, apparently Biden is going to announce more actions against Russia today. Your TikTok on Bitcoin is, oh, you mean the whole thing about, yeah, they think that Bitcoin is a hedge, except for that it never actually hedges when it counts. And it trades almost, move for move with the S&P 500. Yep. Mm-hmm. Hmm. Hmm. Why not follow Marco Rubio on Twitter? I probably should, huh? Russia conducted missile strikes on airfields in western Ukraine to prevent them from being used for resupply flights or staging new jets. As I mentioned 2 days ago, this phase brings attacks closer to NATO. One of the strikes was 70 miles from the Polish border. Oh, okay. That sounds a little alarmist, but okay. Anyways, the normal correlation is that equities are going to be inversely correlated to treasury prices. Okay? S&P 500 is going down. You should expect to see treasuries go up. And that's what we're seeing right now, right? This is going down. This is going up. Yeah, kind of going up. It went from here to here. Okay, so it did go up, right? And what is that? We call that risk off. And conversely, if you see the S&P 500 going up, typically you will see the treasuries going down and the interest rates going up, right? That is risk on. We'll call it risk on. We don't call it bullish or bearish. We call it risk on. But sometimes you'll see this. Sometimes you'll see the Federal Reserve comes in and says, hey, everybody, free money for everyone forever. Okay. And when that happens, the treasuries move up. What does that mean? That means that interest rates are going lower. Okay. Interest rates are going lower. So treasury prices go up. But it's kind of the inverse thing, because low interest rates are good for equities, right? And the reason that they're pushing the interest rates lower is to support stock prices. So then you see the ES go up as well. Okay. So My lips are really chapped today. I'm sorry. It's like really distracting to me, but I'm just so ADHD. It's hard for me to ignore it. Plus, the Squindu Squawk is saying things over and over again. Okay, so when the Federal Reserve is lowering interest rates, Treasury prices go up, interest rates go down, S&P 500 goes up, and we call this buy all the things. CryptoPop says blah blah blah. This will never make you money. Okay. If you want to go short when the Federal Reserve is putting easy money on, that's your own business, but I wouldn't recommend it, right? Buy all the things. And when you see a move like that, you will see everything go up. Equities will go up, treasuries will go up, gold will go up, commodities will go up, oil will go up. This is just buy all the things, right? Conversely, you can also get this situation that we were having before the Ukraine crisis, which is the exact opposite, right? Federal Reserve is going to raise interest rates. This moves down. And the equities hate that because they've been, very entrenched in this growth trade. And so then everything goes down, right? So what does that mean? So when you see a positive correlation between equities and treasuries, that generally means that the market is moving specifically because of interest rate policy, essentially, right? Whereas when they're in inverse correlations, that means that the markets are moving because, equities are doing well or whatever the deal is, and that means that they're going to have to raise rates. Or conversely, equities are doing poorly and they're going to have to reduce rates, right? And that's why you get the correlations that you do. So to interpret the correlations between the treasuries and the equities, you have to interpret the news to some extent, right? Now, there's another step of this, and this goes back to what we were talking about before, which is, okay, when that happens, what does the yield curve do? Now, this gets even more complicated because what the yield curve does is based on a number of different factors. So one of the factors is expectations of future interest rate policy and expectation of future growth, right? But the yield curve is kind of, like different points in time, right? So if we're going to have a recession and we think it's just a short little recession, then what we're likely to see is the Federal Reserve lowers interest rates, but a recession is usually done within 2 years. That's why it's a 2-year treasury, right? So you'll see the interest rates lower here in the 2-year, but you're not going to see the interest rates move down as much in the 30-year. So what is that? That's steepening. That's steepening, right? Conversely, though, if you think that we're going to go into a period of low growth, or let's say you think that what the Federal Reserve is doing is bad, so you think that a year from now they're going to have to lower interest rates and then bring them, then you might actually see some changes here in the 5 and 10, right? So when you get that, or essentially you say the yield curve looks like this, and then it moves to this, or sorry, not to that. It moves to this, right? Those 30s come down, which is what we've been seeing lately, right? This is kind of an indication that the market thinks that we're going to go into a period of low growth and that the Federal Reserve policy is maybe not positive. I mean, that doesn't always mean what a flattener means, but that's why you hear people say that, right? So you kind of want to go and look at that. But then there's this other factor, which is the risk premium, right? So right now, if you have a treasury, remember that this interest rate is per year. This is like you should get 2% per year on the 10-year, right? So why is it that you get 2.384% per year if it's a 30-year versus a 10-year, right? Well, because you're holding it for longer. There's more risk involved in holding a 30-year. So they have to pay you a little bit more to convince you to get the 30-year. Otherwise, you would just only buy 5 years and roll them over every 5 years, right? So this is called the risk premium, right? And what we've seen as of late in the treasuries is that the risk premium is not very much because we expect interest rates to be low for so long and growth to be relatively lower on a long time frame and everything like that. They're not paying you very much to hold longer dated bonds, which is a problem, frankly. And another thing is that holding the treasury. So look at the price here, right? Remember that bonds, like when it's issued for 100. So you're actually paying more for it than what it's issued for, right? That means that if you hold the bond to maturity, yeah, you're going to get 2% per year, but you're going to lose money because you're paying more than what the bond is worth, right? And this is called the cost of carry. So because these things have a negative cost of carry, why do you want to come over here and get the 30-year, right? Because that's just cost of carry forever, for 30 years. Yeah, you're going to go and lose money for 30 years? You want to do that? And no, you don't. So this kind of leads to a really interesting situation that we see in the treasuries that also leads people to come to a false analysis, I think. Okay, which is that because the cost of carry is negative, and that results in the risk premium being lower, the yield curve is actually more likely to go flat and or invert, right? Because when you look at it, so if we're talking about a yield curve, right? Like here's a flat yield curve and here's an inverted yield curve. That would be an inverted yield curve if the 5-year or if the 2-year was higher than the 10-year, right? Oh, she's bringing in the puppy. Okay. Need to fix the pee pad. You should write a book about this stuff. There's many books about it, though. Although I would say I originally learned this stuff from watching the Federal Reserve press conferences. So on Janet Yellen's last press conference, she talked about this issue in particular. She said, well, yeah, the yield curve is flattening and possibly inverting, but because the yield curve was so flat to begin with, it might not be the signal that we think it is, right? But so that's what you're seeing today. Why is the yield curve steepening? Well, the yield curve is steepening because they think that the Ukraine crisis is going to abate. The stagflation risk is not as strong. Therefore, the risk of lower growth going forward is less. Therefore, we can afford to have a higher risk premium in the 30-year because interest rates 30 years from now hopefully will be higher, right? See where it's going? And then you get steepening. Right. Whereas typically speaking, when the economy is getting better, you tend to see the yield curve flatten, right? Like when the economy is at its peak, it's usually the yield curve is usually its flattest. And when the economy is at its worst, the yield curve is at its steepest. So it's steepening. Doesn't that mean that the economy is getting worse? But in this case, that's not what's happening because they're making a move based on the risk premium component of the treasury, which is saying in the much longer term, growth prospects look better than they did. I know that was complicated, but I think you understand every one individual one of those points. Just focus on those individual points, and then when you're seeing things happen, you'll be able to sort it out, right? Those books are too big for my little brain. I have to say, it gets confusing because I think the reason that people have a hard time with it and why I had a hard time with it at the very beginning is because you're trying to visualize it in your head, right? You're trying to say in your head, this is going up and this is going down and yada, yada, yada. Whereas what I do in my head is I do know, okay, this is steepener, this is flattener. Okay. And I just know that, okay, when I see this pattern, that means steepen. When I see this pattern, that means flatten. But I don't come in down and sit and say, okay, but that means that the short-term interest rates are rising more than the long-term interest rates, and that must mean X. No. Once I get into that point, what I'm thinking of is okay, there is the cost of the bond plus the interest rate policy plus the risk premium. There's a bunch of different components that are involved. And if we're seeing a change in the treasury prices, which component of that is moving? Right? And which part of these are, and what does that mean for the economy? And so it's a different thing. It's X equals Y for me in that, I'm not drawing the picture. Right. Mm-hmm. But what that comes into is that, yeah, what I would like to see is what is the correlation between ES and the 10-year treasury? But then I also want to know, is the treasury steepening or flattening? Right? Because if I'm seeing the ES come down, but I'm seeing the treasuries flatten right now, that might not necessarily be a good thing. Okay, this dog. When this dog comes in, he's obsessed with this light. Did you see he pushed the light over? Well, you can't really tell, but then it reflects on my screen, which I really, really hate. Yeah, I need to do something about that. Maybe I need to get colored lights for that thing up there and do that instead. I don't know. You say 680 test and NQ. Well, I don't know. Like we had that drop at one point, and we've had another kind of a flush lower, but look, it didn't move that far. It's kind of coming back up. I'm not sure that any of those moves were really actually informed trading based off of the way that it's gone since then, huh? Because it's just such a small movement, relatively speaking. Yeah, there's a bunch of headlines been coming through. It's actually been a pretty active news day for a Friday. But ultimately, the market's not going much of anywhere. Hedge fund Fir Tree bets big on short of stablecoin Tether, says Bloomberg. What? How do you go short Tether? I must know. Fir Tree Capital Management is making a substantial short wager on Tether, a stablecoin that's under intense scrutiny from regulators. The $4 billion hedge fund funded by Jeff Tenenbaum constructed a way to short Tether in an asymmetric trade, meaning the downside risk is small and potential to make money is great, according to clients of the firm. That's a feat that other firms have struggled to figure out. Dude, I want to know how they did that. I want to know. I have to know how they did that. Because I would enjoy nothing more in life. It would be the pinnacle of my life, aside from, getting married and children and things like that. But the pinnacle of my trading career, to short Tether and make money from it. Nothing would make me more happy. I have to know how they did this. And I cannot figure out, how would you do that? How do you even get exposure just to Tether other than trading the Tether Bitcoin rate? I don't know. So this dog has been interested in that light, but you know what else he's interested in? The fight stick. Why do you like the fight stick? I don't understand. There's nothing interesting on it unless there's hand grease or something. Why would you go, of all of the things in this room, why the fight stick? I can't tell if he's licking it or sniffing it or what the deal is. Let him chew. Well, he does have stuff to chew in here. I just think that he's moved on. The problem is this room is too small for him and not really baby dog optimized. I have too many cords everywhere. Like I literally have cords like strewn on the floor for the like right here behind me is where my tripod setup is because I hate having to trying to figure out the correct tripod location and everything. But we can't have him out there in the family room where it would be a better place for him because Azure just terrorizes the poor guy. Metals are up. And gold is recovering. I really hope. I have to say, man, I made a TikTok about this and it got a decent amount of viewers, but I really hope that this guy with the short in nickel gets blown out, man. I can't believe. Can you imagine having that much hubris? You have a short on. It literally blows a $8 billion margin call, requires 30 banks to come and bail you out. And then you come in and you say, oh yeah, I want to keep the short on. What? Person like that should not be given that much money. Like it's the exact opposite of how the market is supposed to work, right? You lose, you're supposed to lose that money, and that money is given to somebody that was able to allocate that capital effectively and get a return on it, right? But this is the opposite. You lost a ton of money, so we're going to give you even more. And then we're going to let you continue to do the dumb thing that you were doing in the hopes that you make money off of it, right? And if he does make money off of it, what does that say? Oh yeah, continue doing reckless, stupid things, right? It's so dumb. I can't believe that they're doing this. I can't believe like JP. If I was going to give him a bailout, JP Morgan, part of the stipulations of the agreement would be you have to unwind the position, like or you have to reduce your risk in some meaningful way because it's just absolutely crazy, man. And I gotta tell you, man, if like say the markets have been kind of a little bit risk off this morning. Well, since we've been on, it was risk on overnight, but so far since we've been watching, it's been risk off. What if a bad Ukraine headline comes through? What if a bad Ukraine headline comes through like on Monday after they start trading the nickel market again and it goes back up? That guy is on now all of a sudden he's on the hook for like $16 billion. Except for that, now that money is owed to JP Morgan. So now JP Morgan has lost $8 billion. Like it's just crazy to think about how dangerous this is. Something I don't really understand is how can a poor guy start invest company and get rich by investing? Well, it's extremely unlikely to happen that way. So I think that many of us, myself included, had this idea that like I'm going to come in and I'm going to scout treasuries until I make, a few $1,000s. And then I'm going to use those few $1,000s to go and play options. And then that's going to turn into $10,000. And that's going to turn into $1 million and yada, 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 yada. And that's how I'm going to get rich. Right. And it typically doesn't work that way. The people that get rich off of doing this are usually managing other people's money. And now all of a sudden they have enough money to do things where you can really get like a good trade, or where you have an impact on the market. And there's real advantages in there, right? What we do here is just like picking up scraps. Really, what we do is pick up scraps. Putin shows no signs of engaging in diplomacy, says France's President Macron. Yeah, if you owe $100, you have a problem. If you owe $1 billion, the bank has a problem. It's really just crazy. Anyways, but here's a way of doing things that I think maybe could work and I think will make sense for us. Is we come in here and we scalp and we learn everything about the market microstructure and how the market works. Good, cool. We know something about the market that very few people know, and that is a little important to understand if you're going to manage a fund. I don't think that Kathy Wood understands this, or if Kathy Wood does understand this, she's intentionally ignoring it to try and fool as many people as they can to investing in their fund. I don't know, but she doesn't seem to understand the impact of orders, right? Well, I think from there you take the next step up. You don't necessarily come in and say, oh yeah, I made $1,000 and I take that up into the next step, because the reality is day trading, unless you're really lucky or really good, I don't know, you're probably just going to lose money, right? So instead, what I think we want to do is take the knowledge that we've gained and start coming up to the next level and start managing portfolios, or starting to learn how to manage portfolios. So I think that will mean like getting a Series 67 license, which is what you need to be an investment advisor, getting a Series 3 license, which is what you need to be a CTA, and start designing more longer term portfolio kind of strategies. Because we did pretty good on the 10-year here, going short this morning, earlier this year, right? So you don't paw at me like you want me to pick you up and then don't come up and say hi to everybody. Here. Right there. Say hello. Oh, you look so good in that camera. You are such a cutie. You're so cute. You are. How's your arm here? Can you see? I think you're okay. Dude, this story about the tether thing, I find it so fascinating. How are they doing this? I want to know. I have to know. What's up with his ears? What do you mean that they're so huge? That's just the type of dog that they are. Wait till he's a little bit older, because they looks like a butterfly when you get all of the hair on it. That's why they're called the papillon. This means butterfly in French. He wants to play. Hello? Yeah. He's trying to get my attention. Good boy. You sit right there. It's a good spot for you to sit. You sit right there and you can listen. Don't walk him on windy days. Yeah. Well, I'm trying to get him used to having his ears touched. So, we'll see. I left that level on top of the camera and take it off there. The Treasury's coming up to their highs now. Aren't we glad that we didn't try and go long yields there when it was 30? And now this may as of yet turn in a more strong move the other way, but it kind of feels to me like the big move happened before we got here, and everything that we're getting today is just mean reversion and chop. You rode the spike up on NQ. Good job. Dude, somebody on Reddit, I don't remember what I was talking to them about, but I had said something about oil back in like February, I think it was. And they made a trade in oil and they said that they made like, oh, how much? What is it that this guy claimed to me? I don't even. And I really kind of wonder how much money he put into this. I'm like, I hope he didn't just put it in just because of me, but I mean, he made money. He says he made $350,000 on it. He says, hey, bro, I think you are right. I think it is right to invest in minerals and crude oil. So I invested in crude oil spot WTI in early February and made $350,000. What? How did he make that? He must have put a ton of money into it, though. He must have put a few thousand into it. That's nuts. That's absolutely nuts. Wow, they deleted my comment because it's not a qualified source. I did back it up with a qualified source. I'm so fucking fed up with Reddit lately, guys. It seems to me that the way that the website works, and I can't say if it's intentional or what, but it seems to me that the whole website is set up to prevent the most useful information from actually getting out. The question about yes, do you know why there are like 200 contracts on both sides, 10 ticks up and down that keeps following the price? Oh yeah, so I I don't really know what the algorithms are doing for that. It is something that you see that is really, really common. I think that what it may be is they just want that to be there. If there was like a 10 tick sweep, then they're willing to take the fill. Something like that, right? As if there is a 10 tick sweep, you're probably going to be able to dump some of it back off on the offer, right? So I suspect that that's what the what the strategy is, but generally speaking, I just kind of ignore those. Well, the S&P 500 is falling apart now, and the treasuries are coming way, way back. Or rather, the yields, when I say back, I'm thinking down. We're almost back to 2%. Almost. And I've got a pretty decent trade from the information that we had. There must be a little bit of luck involved in this and the mean reversion and everything, but it's turned out to be a pretty good one so far. I'm not quite sure where I take it off though. Like that last move makes it. I'm a little torn on. Okay, they filled the gap. Did they just stop there and now it's risk on, or something else? But I mean, it's been down since we opened, so I think we could see more downside. Let's just, this was kind of an experimental trade, or it was more for demonstration purposes, right? As I said, well, here's a piece of information we could trade off. Let's try it and see how it goes. Well, it's going well, so let's just wait. This is the hard thing though, is like when you take it off, right? There is some absorption in this area, probably because it is like the fill and everything, but Captain Price thinks don't touch it. Once you get 20 points, that's usually a pretty good spot, though, I have to say. Thank you makes me sick, man. I can't watch that stuff. We were trading it. I get why some people like it. It's fun, but I don't think I could ever trade it seriously. Does the e-mini order flow try to mimic SPY order? No, I don't think it would. I mean, the whole thing is what they're trying to do in the ES futures is try to predict what both of these they're different. That gets so complicated, right? There's an index, and the index is calculated from all of the things, right? The SPY is, a company that buys and sells things based on what that index is and what people are, so there's how an ETF works, and then there's how futures work. How the futures work is they're trying to predict what the index is going to be, because at the end of the day, it's going to settle at what the index is, right? So the order flow in those two things could be complete opposites, actually, depending on what they're doing, if they're hedging or they're trying to play the move or whatever. No, he got in his bed. Okay. He got bored and got in his bed, and he gave me a little whine to make me know that he wanted my attention, but not while I'm streaming, Goku. Dude, listen, am I crazy? Tell me here. Am I crazy? I come in here, neutral politics. Here I have an article from The Atlantic with an interview with Mohammed bin Salman. Here is the comment from Mohammed bin Salman. Here's the background information that we have about this. They say it's not a qualified source, and they removed the comment. How does that not count? This is like, in terms of like, what can you do to make the price of oil better? This is like the only thing to know. If Joe Biden changed his stance towards Saudi Arabia, oil prices would probably come down. It's not a qualified source. So here I'm left here wondering, okay, is this because it's really not a qualified source and I don't understand the rules? Or is it because it says something that they find inconvenient, and so they're trying to remove that information from Reddit? Seems like it qualifies to me. I come over, I try to post to Wall Street Bets about the nickel thing. In particular, that the guy wants to keep his short open, immediately gets removed. Tried posting it on Super Stonks, gets removed. So what the fuck? It's crazy on Reddit. It's turned into such a shit. And then you go into the trading subreddits. Oh my gosh. The bullshit that they upvote on the trading subreddit, man, the day trading. Ugh. You want to go through and read about the stupid shit that they want to get on here? Oh, look, everybody lost money yesterday. I didn't think that this subreddit was for lost porn. Let's go and look more like what are the top this month. Okay. A 6 monitor trading desk. Cool. You wasted money. That's what you did. This, you need this. That's the top post, I guess. Cool. This is what I need to do is I just need to only post trading, desk setup stuff. Then the YouTube channel will be popular because that's what traders seem to care about the most. Okay, next one. Somebody made 10% on their first day of trading. Yeah, okay. You're going to lose it. Okay, 92.5% win rate. Okay, you know what that means? That means you're taking on excessive risk. I probably made some good money, though, given the time period, if you were trading VIX futures. Yeah. Oh, 3,000. That's actually, given the time frame, I think you should be able to make more off of that, off of VIX futures. This is not actually that good. Well, but it doesn't tell you what the MFE MAE is, right? Just the P&L. But look at this. Okay, the one loss that he did have. Right there, you see it right there. The one loss that he did have is twice as large as his biggest winner. The one loss that he did have is twice as big as his largest winners. Right? His largest winners are 250, and he lost 550 on one trade. He got 95% win rate. This does not have a positive expectancy. He's going to blow his account eventually. This is the bullshit that gets upvoted to the top on the day trading subreddit. Oh, at least they're posting results and like full results now. That's kind of good. This one, first 2 weeks trading. Well, this one's a little bit better because his losses seem pretty small. Yeah, that one's actually pretty good. He's trading E-minis. Oh, he's actually trading a variety of futures. 61% though? This seems fishy. What does he mean by 1R? I wonder. Oh, is that win rate? There's no way that win rate is 60%. And it's a pretty small sample size though, right? This was when they started in 2018. Oh. This was back when the indexes were falling apart, huh? So he's cherry picking, isn't he? Oh, there you go. Then the greed kicked in. I said if I can make 11K in 2 weeks, I can trade quicker, maybe larger, and make 10K in a few days. Started making mistakes all over the place. Started blaming my brokerage, taking the wrong contracts, entering in the wrong direction, bad stops, bad entries, bad exits, you name it. 70 trades, and I made a whopping $288. More trades, less money. Despair sets in. I start questioning my system. I take a string of losses that kills my confidence. This is not. These first results are not sustainable just because of the time period that it was. It's like you didn't make money because of your strategy. You made money because the market was tanking that week. And you were going short. How much did he make during this period? Oh, he made 10,000. He's trading pretty big though. Well, it's not telling me how many contracts he's trading on, but he's certainly taking a lot more risk than I would be taking on rates. Oh man, that's not a bad one, but that one's because I don't think they're just trying to say do X thing and it will work. There you go. This one's probably going to be like, we're probably going to point out some really stupid bullshit in here. Oh, this is just making fun of stuff. Yeah. Okay. Well, it's because what you're trading doesn't really do anything. I took a loss of 150K this year and I owe 75K to the IRS. How is this possible? Because of wash trading rules, you dunce. Oh my gosh. This one I think is so funny. Like, guys, you can't scalp equities the same way you scalp treasuries because of the wash trading rules. You can't, if it's a short-term trade, you get back in, then you can't count the losses. It's like the way that it works is like you're trading a stock and you make a big loss, then at that point you can't trade it again for like 3 months or whatever it is. Otherwise, you can't count the loss. And so you can have losses and still owe to the IRS. Yes, because of the wash trading rules. And people are trading that don't know this. It's so sad. I don't know what to do about it. I don't know what I could say to be like, there was that Bloomberg story. This happened to somebody. More than one person has happened. This has happened to more than one person. Okay, somebody got a book. What book is it? TradeStation. I'm not a huge fan of TradeStation, to be honest. It was a psychology book, of course. Well, if you're going to get a book, it's probably, a psychology book is maybe good because you're more likely to get something that actually helps. So if it's a psychology thing. The ES is heading down again. Profitable traders, what was your aha moment? Why are you asking this subreddit? None of these people are profitable. Cut losses, sure. So now everybody's sharing the advice that every other person in Market Wizards has ever said. Have multiple charts on the same ticker and use the same. You see, this is the bullshit that you upvote to the top. That's your big aha moment, was to have multiple charts on the same ticker. You're fucking kidding me, guys. This is what gets voted up to the top on the trading subreddit. Explain this to me. Okay, have I made my point yet? Explain this to me. Somebody has to have an answer. And I feel like everybody else is stupid. I don't get it. How can everybody else be so how is it that everything that gets upvoted to the top is so retarded? And then you come in, you say something that is actually like useful and empirical and whatever, they downvote it. What the hell is going on? You can see my face? Like, come on, like it really troubles me. Is it because I hate Trump? I'm gonna bet you that having posted in the Donald before probably gets me auto downvoted in some places. I don't know, man. The whole trading world has this mentality of doing things that's like dead wrong. Anybody comes in and tries to correct them, they want to hate you. I don't get it. If you think that everybody else is stupid, then there's probably something wrong with you, is what they usually say. But like, where am I? Oh, okay. So to your understanding, what makes the order flow of treasuries more reliable to trust as a market direction as opposed to traded volume on the ES, for example? Okay, so there's two things going on here. The first thing is that the trade action in the index futures is unique compared to all of the other commodities that are traded on the CME because it is an index. An index, it's a collection of individual different stocks, and those stocks are all moving and they're trying to arbitrage based on what all of those individual stocks are doing, and that creates a lot of noise. And so there is just a lot of noise in how the ES moves. You look at treasuries, when they're doing a good trend, it's like it'll go down 8 ticks, it'll come up 4 ticks, it'll go down 8 ticks, it'll come up 4 ticks. Is very, very clean, right? You never get that. You never get that in the ES. It's always all over the place, right? But then the other side of it is this. The thicker the liquidity is in the instrument, the greater chance you have of there being consistent, predictable signals on them. So let me find this where they talk about this and they explain why. I have this huge stash of all of the studies and documents and stuff that I save. Be here in this scholarly articles. So this is a study by Jean-Philippe, our favorite. Okay. The order-driven paradigm also allows one to resolve some paradoxes, like, for example, that it is surprisingly easier to find predictive signals for large-cap stocks than small-cap stocks, probably because the former are more actively traded and that the order flow reveals more statistical regularities, right? So that's why I tend to gravitate towards the largest instruments, is because their order flow is going to reveal more statistical regularities. And that is certainly the case with the Treasury. Now, I wish I could say that it was the case that it's just like when you see this signal, you're going to see this X thing and it's going to play out like this. Nah, well, it's not so simple. But is the ZN order flow have a lot of statistical regularities? Yes, it does. Okay, like when there is trend in the Treasuries, it trends, right? The way that things tend to happen is very consistent. For instance, yesterday, remember we saw that really big order yesterday? We came down within 1 tick of it and then moved away from it. Well, it was very uncharacteristic of the 10-year Treasury to have a really big order like that and not fill it. Eventually, they did fill it, but then they moved higher. There's a lot more statistical regularities. Because so we're getting the consumer sentiment here. And it is lower than forecast. Let's see here. Sentiment was 59.7 versus 61. Expectations were 54 versus an expected 57. And inflation was 5.4% versus an expected 5.1%. I'm not seeing the treasuries sell on that too much, so I don't know if they care too much about the inflation expectations number. But the market does look a little sour about the consumer sentiment being bad, worse than expected. This stream is so full of information and references. Seth is informationally efficient for sure. I appreciate it, Kayak. Well, the thing that, because of the way that my brain works, the thing that I'm going to be really good at is filtering through large amounts of information and finding the connections between them, right? So that's where, like, especially when we're talking about that whole jumble of what are the correlations. I only know that stuff because I've literally looked at like every little piece of information there is out there about this sort of a thing. And I've been able to discover which pieces of information are actually significant, and then I can share it with you, right? So I'm really good at filtering information. That's why we can be successful with the thing, is because I can listen to the news here and I can tell you which ones are important, which ones aren't, right? But I just don't understand. You need to live with my mediocrity, I guess. Dude, you have to wonder. Okay, so the market has kind of been turning down, okay? But earlier on, it looked like the markets were going well because the Ukraine tensions maybe were easing based off of what Putin had said. I don't believe him, but okay, whatever. Let's just say that scenario plays through and the Ukraine crisis ends. Putin gives up. He leaves Ukraine, and we have peace again. And now everything's hunky-dory, right? Is it hunky-dory at that point? Oh, we're still going to raise interest rates. But like, if we go back to what can you even picture, like, this is the crazy thing of it, can you even picture in your mind the world just continuing on with the Ukraine crisis having never happened, right? Because I can't. I'm sitting here thinking, like, if I went in back in time and we changed time so that the Ukraine crisis didn't happen, I think that something else bad would happen. Yeah? It seems to me like, with the way that things have been going with Biden, it's like every step of the way, something bad has happened. He's made a decision that was poor, and crazy things have happened as a result. Like every step of the way, right? I don't know, man. It's kind of weird to think about. Well, I'm sure glad that I held on to this so far. I think we could get lows of the overnight session, maybe. But I still just don't understand, what is it that I'm doing. You guys are very kind. I appreciate it. But I also kind of suspect some yes men, right? No offense, guys. It's like, okay, there are people that come in and say things, but the people that come in and say things, they're saying things that are like empirically false, you know? I'm just that antagonistic, I guess. People don't like me, but I don't understand why, if I just present a piece of information on Reddit and I try and do it in the most unbiased and concise way possible, and people don't like to hear it. Yes, even your appreciation of Reddit went down with freaking good old Joe. I'm so sour about Reddit. It was really, like, seriously making me feel very depressed yesterday, like how crappy Reddit is. And that's like, I feel like that's the only place that I can go to talk, though. Ugh. Who will pay for all the damage in Ukraine? They said it's north of 100 billion so far. Oh, I'm sure the West will. I think that when all is said and done, the West will come in and do development in Ukraine and make a ton of money from it. And Ukraine will probably end up becoming a more developed country when all is said and done. I hope. That is assuming that there is a lasting peace, which at this moment I'm really concerned about, right? Like, here's what I think is going to happen. I think that Putin needs to get some sort of a win out of this to have any kind of legitimacy at home, because in the end he is basically a dictator, and the biggest challenge that a dictator faces is maintaining their legitimacy. Okay, so I think that Putin probably will invade Kyiv and fail. Yeah, I don't actually think that he'll be able to hold Kyiv. It might look really bad at first, and like the Russians are just going to steamroll them, but then the Ukrainians will not give up, and it will ultimately be a huge blunder for Putin. And they'll want to extract some sort of concession, probably some guarantee that they're not going to join NATO. Although I don't know, but he's going to come in, he's going to lose. They're going to pull back out eventually, but like tensions will remain high. It's like they'll pull back out, but they'll still have soldiers on the border, and any excuse that they can get, they'll come in and cross the line again. So you'll just have, you get what I mean? So it's like the crisis will end, but like it will never end. You know, there will always be like every 3 months something happens in Ukraine, and then the markets freak out about it. You know, I hate to be so pessimistic, but I really think that's the most realistic situation conclusion that we get out of this Ukraine thing. It's kind of sad to think about it, right? And that probably means that although Ukraine will build up, Russia will kind of prevent them from ever getting too strong, right? But you know what? Like one of the things is we've said, everybody's like the nation building doesn't work. Oh, nation building works. Nation building works really crazy well if the people are okay with you being there. If the people are okay with you being there. The Ukrainians will welcome Western intervention over there, right? So they'll rebuild Ukraine, and everybody will make a ton of money. Ukraine will become more developed. The nations that come and build stuff over there will make money. The banks that loan them the money will make money. It'll be a profitable venture in the end. Just like rebuilding Germany was a very profitable intervention for the West. They made money off of, what was the name of the plan that they did after World War II? Because this stuff always works really well. It's just when you try to do it to a Middle Eastern country that doesn't like you that it doesn't work. Oh, I take that back, because we tried to build up South Vietnam, but that was also, it's not that it has to be a Middle East country that doesn't want you there. It really has to do with who your partner there is, right? Also, that was the problem in Vietnam, and frankly became the problem in Afghanistan too, is why we ended up kind of having to abandon Afghanistan, was because the leader there was a shithead. So can we just say almost every year something macroeconomical has to happen to push seasonalities in market in place? I'm not so sure what you intend to mean by that. Listen, macroeconomics play such a significant factor of markets at every level. Equity traders who are only paying attention to their individual stocks and never try and trade macros just don't even realize how much easier their lives would be if they understood the macroeconomics and kind of started from there as a base and then use that to determine which place to go into. But oh well. I've made some, I did make money from my overall trading activities last year, and it was because of that, right? It was because I understood what kind of companies to look for, and I could have YOLO'd into all of the small caps, everything, but I saved my money because I kind of knew that even though I wanted to own these companies, some of these companies for the long term, that the prices weren't very good, right? And I knew that the place to be was in materials and oil, and it worked out, right? That was the only reason why I made money in all those. Latent destabilization, is that what Russia's going to do? Is that what we call it? Okay, so we're going to get comments from Biden here soon, right? You know what? Let's take this off. Okay. Because I don't want to be in this. Because what we've seen every time that Biden has a press conference, I didn't realize that it was at 10:15. I might have when this candle kind of ended up being like a reversal candle. So when I see that sort of a thing, it kind of concerns me for starters, because that's the liquidity hole forming. So even though I think that I could have gotten a lot more from it being down here, and it may yet return back down in here. I don't think I want to be in that trade anymore, because the general tendency with these press conferences have been Joe Biden comes out, the sanctions aren't as bad, in the market rallies, right? Tether's Deltec Bank is being sued for crypto pump and dump. Remember, Tether is a Deltec shareholder and had to get the former Deltec CEO fired. What is a reasonable stop on NQ if the target was 200 ticks? One trade per day. Okay, so this is a tough issue. I don't know if we really have a very good answer to this problem, Nasdaq Killer, because what I have found in almost every study on this sort of thing that I've done myself, and it's that when you have set targets and stops, when you have set stops and targets, that ultimately limits the amount of edge that you're going to be able to pull out. It's like your results are just much more driven by the randomness of the market, essentially. You like how much you make is dependent on how many swings of that much you will get, sort of a thing, right? So that's why, with a lot of my trades, I don't really like to have set stops. And yeah, that does mean that I tend to take on a lot of risk, and that you're susceptible to blowing up at some point when it doesn't work out very well. How do you get started with the macros? That's so hard, dude. The way that I learned about macros was watching CNBC every day for like a year. Right? I want to write a book, and I can people put everything that I know about it on there, but I don't know of a single source out there that will teach you everything that you need to know about this. But you can always ask questions, and I'll always be explaining the particular forces when they're relevant here. So I guess a reason to stick around. Stop needs to where it makes sense and where your trading idea is void. So like one of the things is people think, okay, look for an area that like everybody else would try and put your stop at, and then have it just a little bit further away than that. But I've tried those sorts of things too, and that doesn't work out either. I think that you could, what you could do is, if you know that there is a liquidity hole in a certain location, make sure that your stop is beyond the liquidity hole. That might help, but here's something that we can do, NASDAQ Trader, is we can come and do some stats. Biden comments are imminent. So let me come in here and add an NQ chart. And you like to be in for as short as possible, right? So you like to be in, let's just do it on a minute, okay? And we're going to add the last year, okay? That's going to take a bit. Oh, it actually didn't take forever. I'm surprised. Okay. Now I'm going to come in here and I'm going to add to it my stats for the range histogram. Okay. And I'll use it by area. Value area percent 0.5. Okay. in the log scale so you guys can actually see what we're looking at here. I'm going to make this really big for you guys. Okay, so this is a distribution of how far the range tends to go. I'm going to scale it out. Apparently there are some data points that are like way up here that you can't really see, but I'm just going to focus it in on the area that we can kind of see really well. Okay. So what is this saying to us? If you made money on every bar, so this is a bar, this was the range of the bar. If you made the full range of the bar on all of these bars that were small, okay, it would be equal to what you lost on all of these bars that went longer, that had a wider range than that. Okay. So that's how much the bars over in here are, essentially how many of them are over here, right? Because it is here. Let me do it this way. If I just come back and I change the scale of it, not have it on a log scale anymore, okay? Because it does look like it's linear when it's on a log scale. But if I take a log scale off, then you can really see how much kurtosis there is in this distribution, right? It is a very, very fat-tailed distribution with a left side skew, right? All of the data points are over here, right? So if you really come in and do it, what is this point? What is this 50% point? It is 36 ticks. 36 ticks. So I think that 36 or more ticks would be a stop you could put in that would be pretty reasonable, and if you're really doing things right, won't get stopped out most of the time. Yeah, Biden speech imminent, in other words, an hour late. They're always late, right? I think they do this on purpose, though. They totally do it on purpose. Man, when you without the log scale, then you really see that it's like, man, that's a fat tail. That's a fat tail, man. I wonder where the convexity of it changes, though. I wonder if the convexity of it changes more like here. 60. 36 is a good spot, but 64 would be like probably you never get touched, right? I love you even though I don't understand how you analyze that. Well, do you understand what this is, what this distribution diagram is a diagram of? Do you understand that? This is how big, what the range of a 1 minute was, right? How big was the range of that 1 minute candle? So there was a candle. There was a moment at some point in the last year where in a minute it traded a range of over 340 ticks. The bars, yep, the size of the bars. That's how big the bars are. So what I did was this, is I said, okay, this bar was 4 ticks, or what is it? What is it actually? What is the mode? 8. Okay, this bar was 8 ticks. This bar was 9 ticks, right? So I said add all of these bars up, right? And until you get to 50%, right? I add the value of all of the bars. So this is like the total, like the maximum amount of money that could possibly have ever been made from NQ, right? And then I split that profit down the middle by saying at, which point, if I made money on all of these bars and lost money on all of these fat-tailed bars, where would my break even be? And it is 36. I don't know if that makes it a good spot to put your stop or not, but it's something to go off of. It's something to go off of. Right? And you know that if you're getting more than 36, that you're really getting into a tail event of some sort. Or a shoulder event at the very least. Is what they call this. Is there's the head, right? And then there's this transitional period where the convexity of it changes. Because right here the convexity is this way, right? Like if we took a line, this is really interesting to me, is if you take a line from here to here, you make a line from here to here, then that line is below the price, right? But if I take a line from here to here, that line is above the line, right? So that's the convexity. The convexity changes. And the shoulder is this area where the convexity changes. Oh, so maybe actually it's around here. Maybe the shoulder is around here. I don't know. But the shoulder could be all the way over to here. Could be, I don't know. I don't know. I haven't learned the math necessary to do that calculation yet, but this is why we're just doing the 50% thing. Try 36. Now, of course, when you're gaming that all out, it's like, okay, so if you want, like, you're going to make money on most bars, 8 tick target, 32 tick stop, or 36 tick stop, you can win most of the time, yeah. But that's still like, that's not actually generating edge. That's just basically curve fitting to the existing data. Still haven't heard anything from Biden yet. Looks like I did panic a little bit, and I could have been more patient on getting out of that trade. That's okay. I gave up like what, 20 bucks? Yeah, I made 165, and at max it was 180. So, and I got in at 42.93. So I got a really good trade in the end. Like, this is funny. Like, just think about this, guys. You know, on this whole argument about technical analysis versus informed trading and so on and so forth. So I basically went short right here. Oops. Basically went short somewhere around there, right? I got short somewhere around here, and I got out basically right there. Does that look like a good... Oh, wait. Sorry, I'm not even showing you guys the charts. Yeah, you see the arrows? I got in over here, and I got out over here. Doesn't that look like an amazing trade? I think that a lot of people will be like, "Oh, what moving average and yada 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 are you doing to use it?" I didn't even think about what the price was. I just knew what the price was at the time, and as soon as I saw a piece of information, I said, "Oh, I think we can go short off of this," and that was it. That was it. And I was even kind of like, I wasn't confident enough about it to put it on my live account, but that went way better than I thought it was. But you know what? Based on the piece of information that we had, the degree to which it went was very reasonable, right? The thing that we weren't sure about was whether the market would actually care or if they were going to insist on continuing to be risk on, because sometimes it can be a little irrational like that, right? The most important is that you sell high and buy high, buy the low. No, I don't think that matters at all. I wish that it was that simple. You could come in and you could say, okay, oh, how would we do this? Let's think about this for a second. I think I might be able to program this pretty quick if I can think of an indicator that would do it. I don't know if that would work. Okay, so I think that we could do it with two things. I'm gonna try and doing it. Okay, I'm gonna try doing it. Okay. We're going to try programming buy high, buy high, sell low. Okay. Or sorry, sell low, buy high. What? I'm confusing myself. Buy low, sell high. There we go. Okay. We should just call it new strategy. Buy low, sell high. All right. And then let's see here. $30? Oh, no, wait. That's not what we want. Max. That's what we want. Okay. Max. Min. Do I have to do it like that? Min. I think it might actually be like that in that. Else if state equals state dot data loaded. Max equals max. Yep. And then we can give a period. Min equals min of the period. And then I'm going to add r squared. R squared R2. R2 equals r squared of the period. And let's come in and add down in here that property, the period. Okay. Period, or we have this a ninja script property. Ninja script property public int period get set. Okay, and then on bar update, we can say, okay, so I think that we need to have some sort of a range. Yeah. We're trying to program buy low, sell high. We're trying to program buy low, sell high. What should we call this property? Let's call it margin. Public double margin. And we can make that be a percentage. Okay, so it'll be something like this. Low equals max or min 0. Okay. Range equals high minus low. Actually, this should be double high. Double, I would just call them H and L, because I think that high and low might be reserved. H minus L. Okay. So then we can say if range times, double range, if range times margin Okay, and then if the close of 0 is greater than the high, or H, minus that margin. Yeah. Enter short. Close of 0 is less than the low plus that margin, then we enter short. Okay, but we also want to add another condition, and the R2 is less than thresholds, which means that there's not a lot of trend in the market right now. Okay, so this will be a double as well. Public double margin get set. Okay. And then over here, we're going to say period equals, what should we set our default period to? 12? Let's do it on a 5-minute chart with 12 minutes. That would be like an hour range, right? You know, when Seth gets out the IDE, it's big brain time. I don't know if this is big brain, but margin equals 0.1, let's say. Let's say it's within 10% of the high or higher the low, absolute higher the low, right? And our threshold equals 0.5. I think. Yeah, it should compile. Oh, I've called this the wrong thing. That should be called threshold. Well, it's always on the, all of the streams get saved. Oh, wait, did I called some things wrong. That's margin. That's margin. This also shouldn't be enter short. It should be enter long, huh? Okay. It seems to not like this operator here. Cannot be applied to operands of type, oh, R2 of 0. I gotcha. R2 of 0 has to be. That's the current bar. How is the market reacting to Biden here? We're impose a ban on Russian imports of seafood, alcohol, and diamonds. Oops. Are 2 10-tick stop trades, second trade maybe having a better entry, better than 1 20-tick trade with half the contract size? What? No, the larger that your stop can be, generally the better it's going to be for you. That allows you to take on more risk. Like if I go and I do this back test and I have a set target and a profit on there, the larger that I set my stop, the more money I make, generally speaking. Reading price charts bar by bar by Albrecht. I don't think that trying to put it somewhere based on the past price action helps either, though. Buy low, sell high. Why is it not showing up in here? Buy and hold. It did compile, right? Maybe after I fixed that, I didn't actually click the compile button. Oh no, where did it go? There we go. That's weird. That's weird. It's under strategies. It's called buy low, sell high. It's in the name. It should be right here between buy and hold and candlestick all, and it won't show up. What then am I doing wrong? I usually trade the treasuries. I have ES up there. I think we'll run this on ES, yeah. But why isn't it showing up? I am incredibly confused. Well, okay, we'll do it on YM if you want. It shouldn't really make a difference which instrument we do it on. What am I doing wrong here? That is so incredibly bizarre. I've never run into this problem before. What if I try and add it over here? Do I see it? Don't. Biden is done speaking now. You might get a little rally off of that. Let's try naming it WTF. The old struggle between fundamental and technical trading. If a piece of news is important, it finds its reflection. Not necessarily, though. That's the thing is what we have learned from the empirical research is that the price only reflects the orders that come through, and there can be situations where a piece of news comes through and it's important, but it doesn't result in orders or very many orders. For instance, there could have been a piece of news that came out before Biden started speaking that was important, but the traders decided not to trade it because they wanted to wait until after Joe Biden did something, for instance, right? So there can be many, many instances where the price does not reflect all available information. This is so freaking weird. Yeah, when I compile it, it's not appearing. Just remember, it's a very, very simple way to approach it. Orders move price. If it creates orders, then it's going to move the price. If it doesn't create orders, then it's not going to move the price. And it could create orders and create buy orders and it'll go up. And it could create orders and create sell orders and it'll go down. And whether it creates buy orders or sell orders could be completely independent of whether or not that piece of information actually means that the fundamental price is increasing or decreasing. It's supposed to follow, but it doesn't necessarily. Well, I wasn't getting any error messages though. I'm going to restart NinjaTrader. I don't know. This is really bizarre. It may be that there was an error coming out of my output window and I didn't notice. But the first thing is just restart NinjaTrader and see what happens. This is a really weird bug. I don't know what's going on. Because I don't want to quit without showing you guys the results. You're all really interested in it. Oh, you know what? I have to make one other change while I'm thinking about it. I have to make another change in the strategy. Oh, actually, no, it should be fine because I'm already sure it won't do it when it's up there. And I think we're okay. Oh, okay. There was an error that was coming out and I just didn't see it. Hmm. I've made a really dumb mistake somewhere. Is the market turning? They maybe. Debug, attach the process. Ninja Trader. Okay. Now, when I come in here to new strategy, it should. Input is null. Okay. I think I see what's going on here. I don't think that I actually need these. Let's come into the Ninja Trader documentation here real quick and confirm my theory about what kind of a method it is here. Ninja Trader 8 Ninja script documentation. What? Usually it's been so long. There you go, help guide. All right. Normally just is up there. Okay. And then we search for max. Ninja script, language reference, strategy. No, can't find it. Max. Ninja script max. There we go. Hmm. I'm doing the wrong. Let's just try that. Nope, I think it's still broke. That's funny. That's funny. So what would be a good one to compare with? Like if we look at Ace. State that data loaded, yeah. I don't know. Kind of weird. But this is one of those places where probably somebody else really understands the coding and was really paying attention. I'm sure many of you guys could do it, but you're probably not paying close enough attention to the code. But I probably made a really silly mistake, and my ADHD brain just doesn't see it, just passes over it. That did not fix the problem. Wait, what? Hmm. This is really funny, to be honest, because I'm sure it's a really dumb mistake. Oh, yeah. I just need to say period. It's coming to the point where you load the data and it's saying no. Oh, but maybe that only happens when I'm doing it over here. Because I don't have a data set yet. Yeah. But it's really bizarre that new strategy. Okay. So it's trying to come in from here. State. Oh shit. Okay. I found it. Okay. I found it. I found it. Oh, this is classic. This is a classic error. Okay. Wait. So first I want to undo all this crap that I did. Trying to fix it. Okay. Dun, 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 dun. Okay. The mistake I made is there's a semicolon at the end of this line on my if statement. That was the mistake. And that was preventing it from doing this in the correct time only when data loaded. Oh, isn't that so retarded? There's an extra semicolon where it didn't belong. I knew it was something stupid, right? Okay, so now that we've wasted 10 minutes. Yeah. Excellent. So my original code was almost perfect, except for that one little semicolon. Okay, strategy analyzer. Pop up here. Yes. Yes. And yes, buy low, sell high. Okay, and you wanted YM, right? Okay, fine. We'll do YM. YM include commissions. And I think we could go back. Let's go back to like no. Let's go to 01 2017. Clear this over here. We'll take it a little bit because it's going to have to download the data, right? I'll move everything over here so that I can get my work thing going. Okay, so it doesn't work. Although you do make money. You don't make money, but I mean, you win most of the time. Buying low and selling high does seem to win most of the time. The number of trades that it took is way too high. So that kind of makes me think that I'm doing something dumb. That it's not. Okay, so when it does that, it's going to try sell short. Yeah. Okay. Well, you might actually be able to change this and make it a little bit better. The profit factor is 0.91, so it's not like a disaster, right? If we gave it some targets, like let's say that it tried to grab a quarter of the range or something like that, we might be able to get a little bit better. But it wouldn't be very fair because then you have to have a stop too, right? So fair enough. Fair enough. I can backtest this a little bit more and see if I can find anything for you guys. All right. But I think that should be it for now. Oh, real quick, just do the analysis here and come and look at. Oh, Jesus, this is such a terrible. But I want to look at the MAE. Okay, so that's pretty random. That's actually pretty random. The amount of adverse excursion that they get is a little bit more though. These ones are what's killing you. And the favorable excursion, yeah, it's kind of random. Like we would need to find a way to kind of limit losses and stuff like that. So maybe a stop and target on there might help, but it would probably still be unprofitable. Takes a lot of trades though. Man, it sure takes a lot of trades. But I guess it should take a lot of trades per day because it's going to try and trade like every time that you come up to the top of a range, right? So, and it's not going to take profits on those all the time. So actually, if we take the stops and targets on there, that might actually take even more trades. But that's okay. Hey guys, I get going. I have work. I'll see you guys next week. I don't know if we're going to make a video this weekend or not. I kind of don't feel motivated to do it, but I need to do some more writing. But I'll see you guys on Monday. In the meantime, stay profitable.